In a world of financial noise, let's find the signal. Welcome to Smart Money Sense. On September 5th, 2025, the financial world wasn't just buzzing, it was shaken. Tesla's board of directors announced a proposal that didn't just break records, it created an entirely new category of corporate ambition. A pay package for CEO Elon Musk, potentially worth nearly $1 trillion. This isn't just a story about one man's net worth. It's a story about the future of a multi-trillion-dollar company, the shifting landscape of corporate power, and a financial event that could make Elon Musk the world's first trillionaire. But the question that echoes from Wall Street to your wallet is, why? Is this an audacious, once-in-a-generation incentive to secure a visionary leader for a journey into the future of AI and robotics? Or is it a staggering symbol of a breakdown in corporate governance and a flashpoint in the global debate on wealth inequality? Today, we're cutting through the noise to give you a clear, neutral, and deep financial analysis of this historic proposal. We'll deconstruct the deal, explore the boardroom calculus behind it, and map out the potential ripple effects in our entire financial system. You'll want to stick around to the very end because the real story here is not what you think. So, what exactly is the 2025 CEO Performance Award? First, let's be clear. Elon Musk receives no salary and no cash bonuses. This entire package is 100% performance-based. It consists of 423.7 million Tesla shares, which would grant him an additional 12% stake in the company he leads. But to unlock those shares, he has to achieve what the company itself calls Mars shot milestones. These milestones have two triggers that must be met: market capitalization and operations. Let's start with the big number everyone is talking about: market value. The plan is structured in 12 tranches. The very first tranche only unlocks if Tesla's market cap, currently around $1.1 trillion, reaches and sustains a value of $2 trillion. From there, a new tranche unlocks for every additional $500 billion in market value, all the way up to a staggering final target of $8.5 trillion. To put that in perspective, an $8.5 trillion valuation would make Tesla worth more than the current combined value of Microsoft, Meta, and Alphabet. It would be a company whose value dwarfs the annual GDP of economic powerhouses like Japan or Germany. But here's where the story gets really interesting, and it's the part the headlines often miss. The market cap goals are only half the equation. Tied to these financial hurdles are some of the most ambitious operational and product goals ever put into a corporate filing. To earn his pay, Elon Musk must oversee a fundamental transformation of Tesla. The goals include delivering a cumulative total of 20 million vehicles, achieving 10 million active subscriptions for its full self-driving software, and, this is critical, deploying 1 million commercially operating robotaxis and delivering 1 million Optimus humanoid robots. On top of that, the company must generate $400 billion in adjusted EBITDA over 4 consecutive quarters. This isn't just a plan to sell more cars, it's a public declaration filed with the SEC to create entirely new industries from scratch. Market value can be influenced by hype, by what some analysts call vibes. But deploying 1 million working robots is a concrete physical achievement. This structure forces investors and the public to stop valuing Tesla as just a car company and start evaluating it as a leader in robotics and artificial intelligence. The pay package is a tool to control the corporate narrative for the next decade, and there are strings attached. Musk must remain at Tesla for at least 7.5 years to cash out any vested stock and a full 10 years to get the entire award. And in a crucial nod to corporate governance, the final 2 tranches are locked until Musk develops a board-approved succession plan. If he achieves all of this, his ownership stake would climb from around 13% today to over 25%, cementing his control over the company's future. Now that we understand the sheer complexity of this deal, I have to ask you, which of these milestones do you think is the most difficult? The $8.5 trillion valuation, or deploying 1 million humanoid robots? Let me know your thoughts in the comments below. Your perspective adds so much to this conversation. So why would Tesla's board propose a package of this magnitude? The official justification is straightforward. Board chair Robin Denholm stated that retaining Musk is fundamental to Tesla achieving these goals, and that his singular vision is vital. They believe this is what it takes to keep him eager to meet the challenge. To understand this from a financial theory perspective, we need to look at something called the principal-agent model. Typically, the principals, or shareholders, design compensation to incentivize the agent, the CEO, to work in their best interest. But the situation at Tesla seems to be an inversion of this model. Here, the agent, Elon Musk, holds extraordinary leverage. The board isn't just trying to motivate him, they are trying to retain him. Filings reveal that during negotiations, Musk explicitly demanded a voting stake of around 25% and threatened to pursue his other interests if he wasn't assured of this level of control and compensation. This context is crucial. The board is managing a unique form of key person risk. The risk isn't just that Musk might leave, but that his focus, which they deem essential for the pivot to AI, might drift to his other ventures like SpaceX, XAI, or his political activities. In this light, the trillion-dollar figure can be seen as the price the board is willing to pay to tether their visionary, yet famously distractible CEO to the company for its most critical decade. This high-stakes negotiation is happening against a backdrop of real business challenges: slowing sales, intense competition from China and Detroit, and concerns from some investors that Musk's political commentary is hurting the brand. Furthermore, this all plays out in the shadow of the 2018 pay package, a $56 billion deal that was sensationally voided by a Delaware court. The judge ruled that the approval process was deeply flawed because the board was not truly independent from Musk's influence. That legal precedent hangs over this new proposal, guaranteeing it will face intense legal and shareholder scrutiny. If this pay package is approved and its goals are met, the consequences would extend far beyond Tesla. It would reshape corporate America and have tangible effects on the global financial system. First, it sets a radical new precedent for executive compensation. This package doesn't just raise the bar, it launches it into a different orbit. It could create a new visionary class of superstar CEOs, for whom pay packages of this scale become a negotiating starting point, potentially dominating boardroom debates everywhere. This challenges the very framework of how compensation committees operate. Second, consider the market concentration. An $8.5 trillion Tesla would be an economic force unlike any we've ever seen. Its weighting in index funds like the S&P 500 would become so immense that the fund's performance would be inextricably tied to the fortunes of a single company. Such a massive entity would act like a gravity well for global investment capital, potentially pulling funding away from other innovative sectors. The very existence of such a company also has geopolitical weight. A US-based corporation with a near-monopolistic lead in artificial intelligence and robotics, the very technologies at the heart of the US-China rivalry, would become a critical national asset. Its decisions on technology deployment and international sales would carry the weight of foreign policy, making it a de facto geopolitical actor. And what about the man himself? The creation of the world's first trillionaire. Economists talk about the wealth effect, a theory that when people's assets rise in value, they feel more confident and spend more, stimulating the economy. However, for a single individual, this direct effect is limited. Most of Musk's wealth would remain illiquid stock, not cash, and one person's spending, no matter how lavish, is a drop in the ocean of the US economy. The real wealth effect of an individual trillionaire would be indirect. Their unparalleled ability to single-handedly fund new industries, shape philanthropic priorities, and make massive private investments that could alter the course of technological development for generations. Before we move on, if you're finding this breakdown valuable and want to make sense of the biggest moves in finance, take a moment to hit that subscribe button. We release deep dives like this every week to help you find the signal in the noise. It's free and it ensures you never miss a key insight. This proposal will not have an easy path. It faces a gauntlet of legal, governance, and social challenges. The central governance paradox is this. The board argues the package aligns Musk's interests with shareholders, but critics, including some institutional investors, argue it entrenches him. By handing him the 25% voting stake he demanded, it could make him virtually unaccountable to the very shareholders he's meant to serve, weakening the board's independence and increasing investor risk. An intense legal battle is almost a certainty. Given that the 2018 package was struck down over a flawed process, lawyers will be scrutinizing every detail of these new negotiations. The core question will be whether a truly independent board, acting at arm's length, could ever rationally approve a package of this size. Finally, this deal has become a lightning rod in the global conversation about wealth inequality. We are in an era where, according to research from organizations like Oxfam and data from economists like Thomas Piketty, wealth is becoming increasingly concentrated at the very top. The richest 1% of the world's population now holds a vastly disproportionate share of global wealth. The existence of a single individual with a net worth of $1 trillion, a sum larger than the GDP of most countries, would be a powerful and controversial symbol of this trend. Economic theory suggests that while some inequality is a natural outcome of a market economy, excessive levels can erode social cohesion, lead to political polarization, and even slow overall economic growth by concentrating wealth in the hands of those who save rather than spend. This pay package forces a public debate on these profound economic and social questions. So, where does this leave us? The proposed trillion-dollar pay package for Elon Musk is far more than a compensation plan. It is a referendum on the future of Tesla. It's a high-stakes bet that the company's destiny lies not in electric vehicles, but in a world of autonomous robots and artificial intelligence. It is a landmark case study in corporate governance, testing the balance of power between a celebrity CEO and the board meant to oversee him. It is a cultural flashpoint, crystallizing the complex and often heated debate about extreme wealth in the 21st century. The arguments in its favor paint it as a necessary, if breathtaking, tool to secure a unique visionary for a world-changing mission. The arguments against it see an indefensible excess that undermines the principles of shareholder democracy and exacerbates a dangerous trend of wealth concentration. Ultimately, this story leaves us with a set of defining questions for the future of finance and our society. What is the true price of visionary leadership in an era of disruptive technological change? At what point does a performance incentive become a transfer of power that makes a CEO untouchable? And finally, does the creation of a trillionaire and the corporate machine required to make it happen ultimately create more value for society through innovation? Or does it risk concentrating too much economic and social power into the hands of a single individual? There are no easy answers, but asking the right questions is the first step to finding the signal. Now you have a clearer picture of the Elon Musk Trillionaire pay package. But I want to know what you think. Leave a comment below with your biggest question or takeaway. And if you're ready for the next topic, click here. Subscribe to join the conversation. See you in the comments.